Welcome to Connect, the weekly podcast of the California MBA featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm very happy you could join us today. Before I welcome today's guest to the podcast, I'd like to thank our 2024 President's Council sponsors. These companies provide a tremendous amount of financial support for the California MBA, in large part so that we can continue to be that strong voice for the real estate finance industry before the California State Legislature and our regulators. So please join me in thanking our 2024 President's Council sponsors. And those companies are AmeriHome, Arch MI, CMG Financial, Consolidated Analytics, Funding Shield, Guild Mortgage, and Western Alliance Bank. Thank you all so much for your support this year. We greatly appreciate it. And with that, I'd like to welcome today's guest. I'm very happy to have John Walsh, who is CEO of LERETA. John, welcome.
Thank you very much, Susan. I'm excited to be here.
So I always like to get started with a little background, how people got into the business. So why don't you share your story of how you got into the mortgage industry?
Sure, I'd be happy to. So I've been in the mortgage business now for over 30 years. I went to grad school on the East Coast and decided after that I wanted very badly to get back to the sunshine and beaches of California. Got an interview with Weyerhaeuser Mortgage, who had some affiliation with my college, and didn't even know what a mortgage company was at that point. Supposed to be an informational interview, one of those things, just getting to know business. And I walked out with a job offer, and I've been in the industry ever since.
Wow, kind of one and done. You found it out of college and just kept on that track. It's
kind
not
of
common
addicting
anymore.
No, it's not. It's kind of addicting. Once you get in this business, you tend to stick.
Isn't it? I think so. So thinking about LERETA's products, rising taxes, interest rates are on everyone's mind these days. What impact is this having on LERETA's clients and their customers?
So we're entering potentially what could be a perfect storm of negative impact on existing borrowers, right? First is flood and homeowners insurance premiums are going up across the country, particularly, however, in California, right? On top of that, you've got higher taxes due to record price appreciation, right? And then finally, we've got a problem with commercial real estate industry, and that hasn't yet come full circle. But when it does, there's probably going to be more pressure on homeowners to pick up the lack of revenue being created for the counties based on lower commercial real estate taxes. So all those things coming together could potentially have a really negative impact for borrowers and for our customers and servicers.
Wow. Yeah, well, that does make sense. I did see earlier this year, LERETA had an interesting survey that came out about gauging borrowers' basic understanding and knowledge of escrow. What prompted you to do that survey, and what did you learn from it?
What prompted us to do the survey is, our customers are all mortgage servicers. We've got a couple thousand customers, and understanding the challenges that are facing their businesses allows us to serve them better. Okay. So that's the reason we did the survey. But the results were frankly pretty shocking. Okay. Only 52% of homeowners were completely aware of how their escrow accounts really work, right? Which is really kind of amazing. More than a quarter were not aware that their escrow amounts could change and affect their monthly payments. And a third of them thought that, hey, if I've got a fixed rate mortgage, my my payment is never going to change, right? Clearly, with homeowners insurance and taxes potentially changing, that can have an impact on a mortgage borrower's payment, regardless of whether or not it is a fixed rate or an adjustable rate mortgage. We found out that, not surprisingly, a lot of homeowners really don't understand how escrow works, and they don't understand the risks that changes their escrow account. Past that, half of the homeowners that we surveyed told us that it would be a real hardship if their mortgage payments increased by as little as 10%. 15% of those folks said that they would not be able to make their mortgage payment if that occurred, right? If their mortgage payment increased by 25%, almost half, 49%, said that they would have the material impact on their ability to make a mortgage, and 30% said they wouldn't be able to do it. So, I mean, clearly this points out two things. One is that there is, potential delinquency risk out there today with changes in homeowners insurance and tax. And two, there's some real potential impact on borrowers.
With California's insurance crisis being what it is, I mean, if we don't get some resolution on that, that's going to be a huge sticker shock. Like you say, there's just this lack of knowledge of borrowers understanding what escrow is, and that, when your insurance rates go up, that your escrow all those payments are going to increase as well.
I'm sure you saw the article last week in the Chronicle of State Farm saying they're going to be insuring 1 million fewer properties by the end of next year. And, they're not the only major insurer that is, ceased writing new policies in California. It's a problem in places other than California, but it's particularly a problem in California.
California MBA has been very involved in with a joint kind of coalition of other business associations to kind of shine light on the insurance crisis and encourage our Department of Insurance to take some action. So we're hoping for some positive news by the end of this year, but it's going to be a long process for sure. I have seen LERETA over the years be very proactive on Q4 preparation for Q4 tax processing. And I would like to hear how your team goes to that approach to make that smooth as possible for your clients.
Sure. So look, Q4 is the Super Bowl of tax season. Okay.
Right.
Almost all counties, municipalities have some form of payment due in Q4. And, the interesting thing about tax business is, California, the one area we have it relatively easy is we pay twice a year to the county, right? In some places in the country, a homeowner can have taxes due to as many as 4 different entities, as many as 4 times a year. So, there are 24,000 taxing agencies on real estate property in the United States. And, so we've got to really be prepared for Q4. So we do a couple things. One is throughout the year, we're regularly contacting those 24,000 tax agencies to understand whether or not how taxes get paid have changed from year to year, whether or not penalties have changed. So we've got to, and that constantly happens, and we've got to keep on top of them all the time to find out when is the right time to pay taxes, how they have to be paid, et cetera. Okay. In addition to that, we're constantly having to audit our customers' portfolio to make sure that we've got the right information on their loans, so that we can make escrow payments on behalf of our servicers. Okay. And then finally, every Q4 we publish, and I don't know if to say exhaustive, but a complete guide for our clients to remind them how it is that we have to work together to make payments accurately in Q4, both on behalf of making the servicer's job, and so as to not negatively impact the borrower.
It's a lot of moving parts, especially in that Q4 timeframe. So it's great that LERETA has such a thoughtful approach and being proactive to kind of make that process smooth. John, LERETA became a member of the California MBA this year. We're greatly appreciative of your support for that. But I'd like to ask, do you share with our listeners why you decided to join the California MBA?
So look, I think the fact that we did it this year was an oversight on my part. I've personally been a part of the California MBA at most of the companies that I have run over the last 30 years. And I think we just realized we weren't this year. Look, I think the CMBA provides enormous resources in terms of networking opportunities, educational events to its members. And, as a member in the mortgage banking industry, it's every bit as important that we know what's going on with the industry as actual mortgage companies and banks. So look, we're really looking forward to it, and we're looking forward to working with the CMBA collaboratively on the issues like the one we're discussing today to hopefully get a better resolution for both the participants and the borrowers.
Great. Thank you. Thank you, John, for your support. We really appreciate it. Look forward to working with you this year.
Likewise, and thank you very much for your time today.
And thanks to all of you for joining us on today's episode. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week, and we'll see you next time on Connect.